Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers. And in this video, I actually brought along a very good friend of mine, an experienced real estate investor and note buyer for 35 years. We're going to be talking about the stimulus and the economy moving forward. All right, guys, welcome back. This is Daniel Kwok, again, one half of the Kwok Brothers. And today I have my very good friend, Curiel.
Hi, everyone. How you doing?
35 years of experience.
That's a long time.
It's a long time, man. It's longer than I've been alive. You know what I mean?
God, don't say that.
Yeah, but you know what? He's still got a young soul. You know, matter of fact, you know, we hang out all the time. We were at his house watching the big fight, Deontay Wilder.
That was fun.
That was very fun. Before we talk about the topic, guys, feel free to subscribe to this video. We're putting out a lot of content on the stimulus, what's going on with the economy, and how we can be opportunistic with it. So today's topic, Al, is the stimulus, what's going on with the economy, and how can we be opportunistic as investors, just as a little cherry on top.
I think that's great. I think right now we are sitting on a very good opportunity, guys, to if we capitalize on this. Kind of like it reminds me of the 1980s when HIV was present, and we didn't know, the country didn't know how to deal with it, or the world didn't know how to deal with HIV. This is at a much larger scale. So I honestly, to your point, I think that this is a good opportunity to capitalize and have the greatest transfer of wealth that this country has ever known.
Yeah, and you've been around the game, you know, again for 35 plus years. You know, you're in your late 50s now. I won't reveal your specific age.
59, you can say
it. Yeah. But you've seen a lot, man. You've been around the block, and you know we've got the stimulus package coming out. It's affecting everyday average, you know, Mr. and Mrs. Jones type people. It's affecting small businesses. You know, I just read an article this morning. Wall Street Journal put out $600 billion worth of stimulus, and they're extending the ability for even larger businesses to get involved. You know, for a man who's been investing, you've done it all, right? Everything in real estate, you've done a little bit of everything. Mm-hmm. What is your opinion on all this? How does this affect the market?
I think the market is going to continue with a nosedive. First of all, you got quantitative easing that is continuing to take place. And for those of you who don't know what that is, it's basically a euphemism for printing money. Yeah. So when you print so much money, the dollar is going to lose value, right? The GDP is going from 4% to 6%, negative 6% this year, according to J.P. Morgan in today's report. So I think this is the perfect storm for creative opportunities. I think that for those of you that like hard money lending, that's gone. Yeah, that's gone. I mean, 13, 14, 15%, those days are gone. Right now, the economy is retracting, is experiencing a contraction, and with that contraction means negative rates. Before this pandemic hit, the rate had been lowered to zero, and now they were talking about doing a negative interest rate, which means that for you to deposit your paycheck into the bank is going to charge you to pay. That's not sustainable. So that's going to create opportunity because that stops the incentive to invest. So there's going to be a lot of what I refer to as stockbroker refugees to deploy money with people like us. Yeah. And that creates an unbelievable amount of room for growth and seller financing opportunities.
Yeah, and you're a guy, you've been paying attention to, you know, the economics, landscapes, and things like that for ever since you've been investing. And obviously, as investors, whether it's notes, multifamily, we have to be aware of what's going on. You know?
Absolutely.
So is there a time, my friend, you know, in your 35 years of observing the economic landscape of this country and even globally, have we seen anything like this before?
Never before. Never in my lifetime. And I don't, you know, this 1918 was when the Spanish flu pandemic took place. 50 million people were affected or died. And we've never seen anything. And I don't think we'll see that again to this scale that we have right now. The market, the pandemic, the interest rates, the amount of debt that this country has, $3 trillion a month or whatever is being, I mean, it's crazy numbers, something that you can't wrap your mind around. So I guess we have to play it by ear, but I project, and this is, again, my opinion. Mm-hmm. This is not a what do you call it, a study or anything like that. This is my opinion. I think in the next 3 months to 6 months, you're going to see a rise in vacant properties. You're going to see a rise in foreclosures. You're going to see, because people are losing their jobs, you're going to see an increase in investor activity in a lot of vacant land, in a lot of opportunities in the seller financing space, which is, from my understanding, what you guys do.
Yeah.
And you do it well. Multifamily, tremendous opportunities.
Yeah. Yeah, 100%. So let's go back to the stimulus conversation real quick. Obviously they're most likely, and they're most likely going to inject more stimulus into the American people, into the consumer markets and things like that. How do you foresee that affecting not only just stocks, but let's focus on what you and I both know really well, the real estate market, the housing market. You said there's going to be a lot of vacant properties, in the next 3 to 6 months. But in the overall housing market, how do you think a stimulus check to the American people will affect the housing market?
I think that's just it's a Band-Aid kind of situation, kind of a cure for a bigger problem, a much bigger problem. I think it's going to be a negative effect overall. But if we rely on the government to do everything for us, you're waiting for a big disaster. You got to create your own opportunity. And you got to listen to this again. You need to create your own opportunity. Don't rely on the government to carry you. You need to be forward thinking, think of ways to innovate, think of ways to execute that plan. One of the best ways that I know how is through real estate.
Yeah.
The fact that we are having a lot of pain right now, with a lot more pain to come with the economy, doesn't mean that you have to be affected by it. You can create your own economy. You can eliminate debt by all means. If you can eliminate your own debt and save some of that money, some of those dollars, and deploy them someplace else, and even consider Bitcoin. I mean, that's something that I'm learning about. I don't know a whole lot about it, but the more I read about it, the more I realize the mining of Bitcoin seems to be a relatively quiet space right now, something that we can capitalize on later on. So
yeah, and there's so many things up in the air right now. I think you said it perfectly. If you rely on the government, to help you, you're already in disaster mode. Matter of fact, I saw an interview with Robert Kiyosaki and Ken McElroy, and they were talking about how they're going to start attacking pension funds.
Exactly.
And I think you're right. I think
they'll get them.
They'll get them. Yeah, and Robert usually isn't wrong about many things.
No.
So I think that's exactly the point.
I studied economics and finance in college. Now that was many years ago, by my own admission. So, but part of the project when I graduated was to develop an econometric model. Econometric models is basically taking a whole mini economy, create your own mini economy with the factors that you have: payroll, divorce, home ownership, vacancies, food, everything. Everything was put into this. Back then, we had no spreadsheets. It was just a big analytical thing by hand. What I'm trying to do is I'm trying to relate to what we had with the pandemic to a much smaller degree with HIV to what we have now. And the model that we had then, and I'm talking 30, 40 years or so ago, is minuscule compared to what we have now. So if you take the factors from historical data and you analyze it and you project it out and extrapolate those figures, I think that you'll see that the dollar is going to continue with a nosedive. I think gold and precious metals is going to go sky high. I think the global debt is going to be a problem. And I think we need to adjust to that. And again, I hate to be a broken record, but if you rely on the government, you're in for a big downfall. So don't rely on the government.
Yeah, let's end this video with a very much of an optimistic role.
Yes.
I mean, you and I have been talking a lot about what's going on, what do we think is going to happen, and obviously that's a lot of videos out on YouTube right now, along with a lot of media sites. But I like to be opportunistic here at the Kwok Brothers, and not only do I want to identify the problem, but how do we provide a solution as entrepreneurs, and how do we capitalize? So, in your opinion, now you've seen 3 market cycles, 4 market cycles
3 or 4, yeah.
in your lifetime. You've seen the .com. We talked about that before this video. The 08, obviously. How do we, as investors, as real estate entrepreneurs, what are ways we can capitalize here?
You go against the grain. First of all, don't follow the crowd. Go against the grain. At the end of the day, we are going to be okay. It's going to take a while, but we are going to be okay. Everything will readjust. The debt, somebody, is going to be a very painful awakening. but but in the end, we're going to be okay. Somebody's going to have to default on some debt. But some of the biggest gains are made when the market is down.
Yeah.
In 2008, more millionaires were made in 2008, 9, and 10 than in the entire 40-year period. And you can double check that. That's a fact. So to be upbeat about it, create your own notes, create your own seller financing, be the bank, go against the crowd, and you're going to be fine.
Yeah, 100%. Well, again, thank you so much for being here. And thank you guys for listening. Subscribe. And where can they find you, my friend? Because you got a lot of great stuff.
Thank you. You can reach out at info@associatesinrealestateholdings.com. I'll say it again, info@associatesinrealestateholdings.com.
Awesome. And we actually just recorded a podcast where he actually shared his first deal experience with not only real estate, but also notes, which is what you specialize in. So again, check his stuff out, guys. Al is one of my very, very good friends. And the conversations that we have together when it comes to business, mastermindings, and ideas, it's phenomenal. Yeah. You know, it's always a pleasure. So thank you, Al, so much.
Thank you, guys.
Thank you guys for watching. Subscribe, like, share this video. I'll see you guys in the next one.
Take care.